A glitch in Turbotax, probably the most popular tax preparation software in Canada, has left many Canadian families owing CRA tens of thousands of dollars. What happened, and what can you do about it? I'm Sunny Weiderman from Personal Tax Advisors. Now, before I forget, please like this video and subscribe to the channel to learn more about the ins and outs of the Canadian tax system. So, reports have emerged of a large number of families affected by a glitch in Turbotax that's led to reassessments and huge bills owing to the CRA. From what I can infer from what everybody is saying about this, from the taxpayers who use the software to the software themselves, it appears that Turbotax users who were filing only their own return accidentally omitted their spouse's income, which is required to calculate a family's eligibility for certain credits. The omission made it look like the second partner was earning $0, which made the family's income look very low. And this triggered these low income credits. Now, years later, CRA has noticed the problem, reassessed the returns, and they're asking for these amounts back to the tune of tens of thousands of dollars per family. Now, this is what hiring a professional is really all about. Software helps people enter data, but nothing can replace experience and actual knowledge of the tax system. Personal Tax Advisors uses a combination of software tools and internal quality checks and second reviews and years of accumulated knowledge to avoid errors. But more importantly, we understand the tax rules and the consequences of seemingly small details. Tax law is cumulative. It's a bit like a house that's had additions put onto it over the years. The changes are layered on year by year. Credits come and they go, and the rules appear, and then they shift, and then they disappear. And there are now 1,000 little corners and anomalies and quirks in CRA and in its agents that you learn one return at a time. The best software in the world could never save you from all of them. Only experience can do that. For a layperson who's only doing one return a year or two returns a year, it is pretty easy to miss something like this. And if you're one of those people, what can you do? Well, you could try to get compensated under the terms of Turbotax's guarantee, which says that they'll refund any money that you lose due to a software error. You could try, but the problem here is twofold. For one thing, Turbotax is saying that this is user error and not their software's fault. Intuit, the makers of Turbotax, argues that it's the user, not Turbotax, that entered zero for the spouse's income, and the user who turned off the software review or ignored or didn't understand the warning from that review. If Turbotax can show that that's the case, then they'll use that to prove that they're not responsible for the problem. Let's say it goes the other way and it's ruled that this is Turbotax's error, it's their fault. They still won't be on the hook for most of the thousands of dollars that the consumers are being forced to pay back. Remember that in this case, the amount CRA is demanding back are actually credits that the taxpayer received in error. As far as the system's concerned, the credit that CRA is now demanding back has not been lost due to what the taxpayer filed via Turbotax. Rather, it's the other way around. The Turbotax return triggered a gain that they weren't entitled to, and returning those amounts is a correction back to the way it should have been from the start. That is not much comfort to the taxpayers caught in the middle, but the bottom line is there is no way Turbotax's guarantee is going to force them to refund most of this. They might decide to do it anyway as a publicity stunt, but I doubt it, simply because the amounts are so high. Now, there is a part of the clawback that could be refunded by Turbotax, and that is the interest portion of the amount requested. So CRA applies an interest charge to any amounts they demand from taxpayers from the past. Since these clawbacks are retroactive to several years back, there's a significant interest charge attached to them. If any of this debacle is pinned on Turbotax, consumers could make the case that the years during which they had use of the funds from CRA, where interest was accruing, not to their knowledge, but it was happening, that is Turbotax's fault. So Turbotax might pay the amounts that resulted from the delay, That is, the interest portion of the amounts. All of this to say, always enter your spouse's income where indicated, even if you're only filing a return for yourself. And remember that do-it-yourself software may be cheap, but that doesn't mean that there isn't a cost. No software in the world can replace experience. I'm Sunny Weideman from Personal Tax Advisors, and I'll see you in the next one.